Hi everyone. Today we did get a full reversal of that after hours sell-off. We did get a slight continuation early in the after hours and pre-market sessions, but then you can see straight up all day until we consolidated right at the highs from the previous day. So we ended up getting support 585, could have bought in that area obviously very early in the session. The low during the session was only 587, so that was a little bit far away from the level, within $1, but not too close. And then you can see continuation through. Could have bought on the 591 break, and then we didn't get to that next level, so 597.63 is your resistance. But let's take a quick look at the charts and see if we can find any additional information for tomorrow. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Jamie Dimon came out and said markets are far too complacent on tariffs and expects S&P 500 growth to collapse. We've been saying this on the channel for a while, and I 100% agree. I think we are not accounting for how much these are going to affect earnings of these companies. I believe a lot of these companies are going to have to eat a lot of the tariffs if they expect to maintain demand, and markets just have not priced this in a reasonable way. So what he's saying here, stocks are not properly priced given the current possibility of inflation or stagflation. Of course, international tensions with tariffs and US deficits. Definitely interesting. We have huge deficits. And he says he considers the central banks complacent at this point, and he doubts their ability to manage the current situation. Market came down 10% and it's back up 10%. Extraordinary amounts of complacency in the market. I still believe that we have at least another leg down to retest those lows at a minimum, and I am fully in line with Jamie Dimon, fully agree. And then the last thing he mentions here, predictions fall to 0% growth after around 12% for the year. If this happens, stock prices will likely fall and earnings estimates will come down, meaning that the PE ratio will go down and markets will become cheaper, not just on a PE basis, but we'll see multiple contraction as well. Moving over to fear and greed, we were unchanged on the day at a 70. You can see slight uptick there. Still extreme fear on this indicator, which is absolutely bananas. I'm not even sure what it's measuring at this point. The momentum is absolutely very strong to the bull side, but strength still moving higher. Breadth at record levels at this point, 1676. Very, very close to these peaks before we started to see some roll down. Put call ratio, very, very low level. Volatility neutral, makes sense. And then these didn't move either. Extreme greed on both of the bond metrics. Moving over to the economic calendar, you can see leading indicators was even worse than expectations. It was expected to be negative. Previous number was also revised down. Don't love to see that. Absolutely not good. Really no data here until Wednesday, 20-year bond auction. Continuing to watch those. Want to see what interest rates are doing, but really nothing here for the Tuesday. And then some soft data on the Thursday, and that'll pretty much wrap it up for the week. Not a ton of data this week. Moving over to the charts, starting off with the S&Ps, you can see we were basically flat on the day, up just 65 cents. Talked about it a little bit on the intro. We're right at the highs from the previous day, just slightly above it here, looking for 597.63 as your next level. Almost hit overbought conditions, but didn't quite do it. Momentum continues to fade on the daily chart. We continue to be at overbought conditions. Is this the zone of resistance, the low of this consolidation that we've been talking about? Or does it push through here and get to the high of the consolidation, which is your all-time high here around that 610, 611 area? I'm very concerned that momentum is fading at overbought conditions. I just can't imagine that we get all the way to here. But honestly, this rally has been way more aggressive than I expected. I thought we would get at least to this zone here, the lows of this area around 578, but this is a bigger push over the last 2 weeks than I expected. Moving over to the Tasty charts here on the weekly, you can see we did get through that ATR trailing stop, which puts us into bullish conditions on the weekly chart. Will that hold for the end of the week? That still remains to be seen. Obviously, this is the weekly chart, and that week doesn't close until Friday, so we still have potential that this could roll back to the downside and end up closing still in bearish conditions. But for now, we are still in bullish, and we are still holding this structure here on the daily chart above that 8 EMA. Didn't even pull back and test it yet, but the momentum, 0, volume, 0. And I still view this as a zone of resistance, even if we are technically above that trailing stop. Moving over to the NASDAQ, similar thesis here. Came down, tested some of those levels, rallied right back up to the resistance. 523.24 is that level. That's the level we've been watching. We are super overbought at a 70.87 on the daily chart. You don't see it that overbought that often, but we are there right now, and you can see Did not even come down and test support at 509.74. That was the zone we were watching. I was kind of watching this area here. We did obviously push through there, but pushed back through up to the upside, and now we're headed back towards 523. If we get above that, obviously I'm going to have to make some positional adjustments. Right now I'm watching this as resistance, and I still think this might be a little bit of a sideways consolidation, maybe a bit of a pullback in time at this point, but this has held up really well. We closed on the high, and even in the after hours we're seeing just a little bit of a push here. So watching that level closely, 523.24. Then moving over here to the Tasty charts, you can see we are way above that upper ATR resistance here. We talked about that last week. We closed above it. We're right at it. The current ATR band on the weekly is 523.48, so pretty much in line with that level we've been talking about on the previous charts. If we get through there, then we're probably going to be taking back that all-time high around the 540 area. We'll see if we can get there or not. Right now, we're still in that zone of resistance, not quite clean breakthrough of that yet. And then looking at the daily chart, still way above that upper ATR band, still super aggressive on this run. Again, did not test that 8 EMA at 511. I thought that we would. Didn't even test it, and then we did get the bounce right back to that most recent high. Moving over to the Russell and the Dow, the Russell did end up negative on the day. It was the only one out of the top four that did end up negative, down about 0.5%. Dipped back to this kind of consolidation low, got it back above 208.22, and you can see after hours are kind of hanging in here. If we get too much more of a push, I'm going to go long to get to that 211 level, and then look for 214. Maybe that 200 is your resistance there at 216 potentially, but momentum continues to fade. RSI continues to fade, and I do have some genuine concerns that we can't really get above this kind of consolidation range. We've been here for 6 days at this point, and if we can't get breakout here soon, I think this momentum is going to be lost, and then we're going to see a bit of a pullback, potentially back down into this kind of 200 area. But for now, we're still in it. And then looking at the Dow, got back above that 426.20 level after dipping below it. Momentum still bullish. RSI still headed towards the upside on the Dow. Your resistance is going to be that 432.78 level. Moving over to Apple and Microsoft. Apple continues to look terrible. It did go quite a bit lower. It did end up holding the level 207.14, down a little bit over 0.5%. Momentum fading, RSI fading. Does not look super great in here. We've been saying we didn't like Apple, still don't like Apple. And then Microsoft, an absolute rocket ship, up 1%, clean through that next level. After retesting it again, 453.30, your next level is 466, which is your all-time high. So just keep that in mind. We are basically back at all-time highs here for Microsoft. What a run from the 350s to the 450s, potentially going higher here. Already super overbought, but continues to go higher. Moving over to Tesla and NVDA, interesting to see Tesla finally showing a bit of hesitation. Had a massive week last week, 17%, so far down 2.25 this week. And looking at it here on the daily, you can see we're in the same trading range we've been in. 336.67 got tested, momentum fading, RSI fading. We've been overbought here for a couple of days. Resistance still 355.03, waiting to see if we can get above that or not. Otherwise, it seems like we're probably going to go a little bit lower, 336, and then your next level would be 324. NVIDIA also basically flat right in this consolidation range. Out of the big stocks, really only Microsoft is showing any kind of strength. This is also overbought, momentum fading. Not expecting anything here really from either of these stocks. Moving over to staples and discretionary. Staples continues this run up towards that 82.53 level. After hours, it's up even more. It looks very, very strong here. If it can get through there, you're probably headed to 83.40. And then potentially as high as 84.50. Otherwise, discretionaries continues to struggle at the trend line here. You can see big down move, big up move to this zone of resistance, and we are so far struggling there. You can see we are fading on momentum. RSI super overbought, can't seem to get above this zone of EMAs. Your next resistance, horizontal resistance, is that 219.18 level. We haven't even touched that quite yet, and I would suspect that if we did get there, we would see a bit of a breakdown. You can see this consolidation low from this high, lower high setup. Big breakdown through here. We're retesting. I suspect that we'll see this roll to the downside here soon. Moving over to breadth, you can see a bit of a nothing burger again on breadth, unchanged on the 20-day at that peak level, 86.53. The high of the day was 86.28, so we did come very close to a touch there, and then we're right at it again. Momentum fading, RSI right at the SMA. 50-day, however, did get above that 77.47 level. Is it going to go to 83.83? Potentially, if it does get into this kind of 83 zone, that is another very critical level. 77 is already important, but 83 has been a pivot point many times over the past several years. You can see many times coming in here January of 23, tested it back here August of 22, retested it December of 22. You can see we got into this range July of 23, big retest April of 24, tested it here through September of 24. All of those were pivot points. Are we going to get there one more time and get a major breakdown? I think that is potentially in the cards. Moving over to the dollar does not seem to be finding too much strength here. You can see big sell early in the session on that downgrade, continued move from the Friday, and now we're back into that 21 area, the next level 99.83. We said this looked like a bear flag before. Is it going to be a bear flag? We're not quite sure yet, but momentum fading, RSI right there. If it's going to bounce, it really has to do it here soon. We already got a very close move to that 21 EMA, but for now, still in this bear flag type setup. Doesn't mean we can't find a base and rally through, but right now it doesn't look nearly as good as it did back here through the early part of May. Moving over to bonds, you can see bonds really didn't move a whole lot either. JNK was down 6 cents, TLT was down 25 cents. Did test a lower low before bouncing back above that 85.10 level, very important level. Did hold it. Momentum's moving to bullish. RSI not so much quite yet. We do have a bit of a base in here, but hasn't really shown that level of support that I want to see. If we can get some follow through here tomorrow, maybe to that 21 EMA around 87.40, that would be interesting. But right now, this still does not look good enough to start buying, even though it's in my buy zone. Moving over to the VIX here, you can see the VIX did pop up a little bit on that initial move down. We said this was a base of support. So far, it has held up pretty well. I thought we would go to this kind of 1650 area. We didn't go here. We ended up holding up. Are we going to get above this kind of 20 area? I still believe that that is going to happen. We've seemingly found a little bit of a base. And since we didn't sell off to support, my guess is that this is going to swing up here a little bit. Might take some time. The timing is always hard, but it does look like we've established a base on the VIX. Moving over to my accounts, you can see I made a little bit of money on the day. It says I'm up a little bit more after hours, which is not completely true, but we're back to where we were and a little bit above that from the Friday. You can see the actual loss at this point would be about $300, and you can see the net loss on this call is about $1,900. So about $1,600 of that should come in over the next 30 days if I were to hold this to expiration. Obviously, I'm not planning to do that, and I do suspect that we're going to see a little bit of consolidation here and some lower lows to come. But for now, totally fine holding this position, plenty of protection, plenty of credit to come in over the next month or so. I am still neutral on markets unless we can get above that 523 level and hold above it. If we do, then I'm going to be playing for some more bullish moves, but for now, still neutral. Can't seem to get above 523. Let me know down in the comment section what you think of Jamie Dimon's take on the economy, the stock market, and the geopolitical risk. Are we going to be going lower no matter what because of the tariffs and all of the geopolitics, or can the stock market regain its momentum and start to see earnings growth once again? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.